that brings us to the opening of the next session. And the next session that we've got today is a panel discussion. And the panel discussion is what does the Australian fintech market look like post-COVID-19? And we've got an expert panel here today, and it really is a panel of experts that I'm very proud to be able to introduce. And they are Rebecca Schot-Guppy, who is the CEO of FINTECH Australia. Rebecca, welcome. It is Dan Teper, the head of FINTECH KPMG Australia. Welcome, Dan. And Simon Cant, co-founder and managing director of Reinventure, which is, of course, one of Australia's greatest investors in the fintech space. A great track record. It gives me great pleasure to welcome you here today, Simon, indeed. Great. We've got Rebecca and Dan. I can see you there. And we've got a 45-minute panel discussion. In fact, we've got a little bit of extra time. So what I might be able to do is extend this session for an hour. We're at 5:25 now, so I think we'll be able to get through to about 6:25, which would be great indeed. And I've got a series of questions here, which I'm going to ask my panel members, and we'll look to wrap it up at around 6:25. So Rebecca, welcome on board. Dan, welcome on board. I'm going to start with you, Dan, and ask you the opening question and set the scene, if you like. Why should startup fintechs consider Australia and New Zealand as a great place to launch and base themselves in the region? And what are some of the strengths and characteristics that you have found in your experience with fintechs in the region?
Sure. Thank you, Andrew. I guess the first thing I'd note is just the infrastructure that's set up here in Australia and in New Zealand, in fact, in terms of what the initiatives are in place and what the landscape looks like. So Australia has an extremely digital native audience. There's extremely high prevalence of smartphone usage, contactless payments. And what that's been supported by is in a lot of government initiative. We've already heard today around the CDR and open banking and what that means and what advantages that give. A lot of the UK participants here will be familiar with that. In addition, most recently, they've set up the new payments platform, which allows for live transfer of payments, which again allows for new innovation and builds off the back of that. And in addition to that, there's been changes to banking licensing and regime to again increase the prevalence of neobanks and digital native banks, again to follow on from some of the examples we've seen in the UK and Europe. So from a landscape perspective, the market's extremely well set up. And then when you think around kind of just the banking market, whilst Australia might only be 25 odd million people in terms of population, we've got an extremely innovative and leading financial services market in the traditional sense. So when you look across kind of the ASX, of the top 6 companies, 4 of them are banks. Of the top 20 companies, 8 of them are financial services institutions. So that just gives you an idea of the prevalence of FS in the marketplace here. And what that means is that all of these providers in the market is really understanding what the products are, what they want to do, and they're driving innovation. What we're also seeing is those incumbents driving and pushing kind of new products. So in the Australian market, in the banking market in particular, there are 4 big banks. In total, they control roughly about 80% of the banking market by product. But those banks are not the lazy, sleepy banks you find in different marketplaces. They're pushing innovation in their own regard. And as a result of that, what we're seeing is that a lot of the fintechs who are establishing themselves here are having to become best in breed, best in market, both in terms of innovation, both in terms of platform, and both in terms of technology. And what that's meaning is those who are managing to be successful are then being able to take their products into new markets. And we've seen that with the likes of Afterpay and Zip in the buy now, pay later regime, who have been extremely successful. And we expect that there'll be more of those following suit in due course. The final is just Australia is extremely kind of a westernized marketplace in terms of consumer habits. But again, it's a very good test ground from which companies can start and build their presence in the APAC region. And what we've seen and what we hope to continue to see is the prevalence of fintechs building a base here and then moving into Asia. And Australia seems like a very good honing ground to be able to do that, especially in light of some of the other points I've mentioned already.
Excellent. Rebecca, I might go to you now, and I might ask you to introduce yourself to the participants today, and maybe just give us an insight about what FINTECH Australia is all about before I ask you the same question I asked Dan, which is, what do you think are some of our strengths and maybe even some of the challenges that we still have? First of all, your introduction.
Thanks, Andrew. My name's Rebecca Schot-Guppy, for those that haven't met me before. I'm the CEO of FINTECH Australia. FinTech Australia is the peak advocacy body for Australian fintechs. We represent over 300 fintechs across the country. We do three main things, and our three main things are policy and advocacy work. So we're heavily involved in the CDR, the Senate inquiry, changes to the MPP, R&D and things like that. Our other arm is our community arm, and we hope to help our members grow, whether that's helping to connect them to corporate partners, helping to connect them to each other, or helping them expand overseas. And a great example of that is our partnership here with Newfound. And then our last pillar is our events arm. So we run the two major FinTech events for Australia. We run Intersect, which is our annual conference, which is no longer annual this year. It will be going to May 2020. And the Finnies, which are our annual Gala Awards, which will be held virtually this year on the 28th of October. I think Dan covered that question really well. I think our strengths are really the fact that we have a very institutional banking setup, that we have 4 main banks. We have a very progressive digital banking platforms, and our consumers are very well engaged. Not only are our consumers well engaged, our SMEs are very digital. They're connected to the Xeros, the MyObs. So there is a great platform for companies to scale here and really test the APAC market before they look to maybe Singapore or Hong Kong or some other bigger markets. So it's a really, really great testing ground. We're highly literate, we're very innovative, and there's lots of opportunities here.
Rebecca, what would you say is the relationship with fintechs and some of those bigger banks? I've worked with many of those bigger banks for about 15, 20 years. I've interviewed the CEOs of the big 4 banks, particularly over the last 10 years, particularly. And look, they've been, fairly open and honest about the fact that they see fintechs as a great opportunity. They've all had fintech hubs themselves, or innovation hubs themselves. How would you say that relationship is between the big 4 banks and fintechs in Australia?
Well, I think that relationship is improving, and it has improved over the last 2 to 3 years. I think it's particularly improved after the Royal Commission. I think COVID may have slowed down that improvement, but I do think the relationship with fintechs and banks is improving. A lot of them are using them to help innovate from outside in rather than building their technology themselves. Each of the banks now have their own investment arms, so we're seeing an increasing amount of investment flow from all the 4 banks into fintechs. And obviously Simon can talk to that better, but CBA now has X15, Westpac has Reinventure, NAB has NAB Ventures, and ANZ has ANZI. Everyone has a different strategy, but I do think that they're each playing in the market much more than they did 4 to 5 years ago.
Excellent. Simon, Cant, welcome. How are you?
Thanks. I'm well. Thanks, Andrew.
And Rebecca's just mentioned very conveniently as you jumped in there that the banks have all had or are investing in fintechs with different types of vehicles and fintech hubs internally, or innovation hubs internally. Simon, can you introduce yourself to the audience that mightn't know you, and just if you could just give us 30 seconds of what Reinventure's been about and where you've come from in the last 5 to 10 years.
Sure. So yeah, we're the venture arm for Westpac. We're set up slightly differently from most of the other venture arms of the banks, in that we're set up as an independent venture fund. We're on a standard kind of venture model, 2 and 20 type model, which just means that we're, intentionally aligned with the entrepreneurs and set up to ensure that that we sit as a buffer between, I guess, the bank and the entrepreneurs to some extent. And the thesis around that is better to have 10% of the winner than 50% of a player that has been suffocated through a relationship with a major bank, which is a pretty common story. So we kicked off back in 2014. We're probably we're the first bank venture fund in this country, and we're one of the sort of early of the wave of venture funds that are now pretty significant in Australia. Through that process, well, in those early days, fintech wasn't really much of a phenomenon in Australia. And we actually had the benefit of visiting the UK, seeing Level 39 in our first couple of months. We were there at the launch of Innovate Finance, coincidentally, which was great. And on the back of that, we were heavily involved in driving the launch of Stone and Chalk, which is now probably the largest fintech hub down in Australia, and I think it's in 3 cities now.
We'll be hearing from them tomorrow, indeed.
Right. And also FINTECH Australia, which obviously Rebecca is now an incredibly powerful driver of and a great advocate for the fintech community at large. But all of these infrastructure pieces were with the intention of, rising tides floating all boats. So we've been heavily involved in sort of trying to drive that from the early days. In our fund, we've now got about 30 investments. We've got about 150 million under management. We continue to see deals growing, both the size of deals. I think one of the interesting phenomena we've seen is just more and more seasoned and really talented bankers who've said, you know what, I want to step out of the major bank and actually kick off my own business. I think the Athena guys are a great example of that, but there are a bunch of them in market. Judo Bank is similar.
Who will feature later on in the course. Yep, excellent.
Yeah. So so we just see Australian fintech continuing to go from strength to strength. And I think one of the interesting things is to really see it starting to actually expand globally through the likes of Afterpay and so on to become a fairly important global force in fintech disruption. Airwallex is another, etc.
Yeah, there's a good list of now success stories, Simon. And Daniel, I might ask you a question, and I will come back to you, Simon and Rebecca. But Daniel, what are some of the characteristics among the successful Australian startups that you've seen in the last 5 years or so? Is there something that's common amongst the Australian startups that might be different to, say, what's going on in the UK or even the US?
Look, I think all good startups have a very similar kind of culture and a similar kind of heartbeat to them, which is customer centricity, innovation, an ability to drive beyond just the borders that they operate in and be able to grow into new markets, and also be able to pivot their business plan and their strategy into different markets as well. One of the amazing things I always find is a fintech will start as something here and will end up as something there over the course of their life cycle. But that ability to pivot with the market and move is quite relevant. Here in Australia, I think one of the other things that I've seen very well is those who have been able to bring on shareholders and bring on capital at the right time, and the right type of shareholder has often determined their success, especially for balance sheet type businesses. The marketplace here has kind of defined segments at various stages. So kind of you will have the VCs and family offices at the early stage, and then you'll move into more institutional shareholders pre-IPO, and then as you move to IPO. So mapping out that journey is important. Really as well, I think it comes down to aspirations, right? So the ones who've been super successful, the Airwallexes, the Afterpays, the Zips, they've got ambitions far beyond Australia. They see their product as something which is truly global, and which is providing a solution which competes with very much the traditional providers and even the other fintechs in the markets on a global basis. And therefore, what they've done is they've focused more on their ability to grow and expand and to sell, as opposed to necessarily drive profits. And that's been, again, supported by their shareholder base and by the marketplace. Now, I'm not sure whether any of those characteristics are specifically unique to Australia per se, but within the marketplace here, there is a difference between those who've been able to execute that well and those who have maybe not, or who have maybe not been able to get off the ground and stay in that kind of scale up or startup phase, as opposed to moving to growth and into maturity.
Okay. Rebecca, sorry, Simon, to you.
So I was just going to say, just on that, I think one of the things that has tended to set Australia apart is the ability for small companies to list. We've always had a stock market with a fairly low bar when it comes to size of listing. And that has, I think, been attributed to the stock market as a source of funds for mining, prospecting, etc. But I think that's actually, while our venture community has been growing, that stock market phenomenon has been a huge source of venture capital, really, for obviously the likes of Afterpay and Zip, which both pretty much went to the market very early. I think it is, again, one of those things where the venture funds are now growing in size and some of the later ones are much more venture backed. But I think that having that choice is still actually quite a powerful thing for Australian ventures.
And I think, Simon, that's a trend we're continuing to see, right? So last year we saw Tyro, MoneyMe list, and I know 3 or 4 other fintechs that are looking to list this year, and I definitely think that's a trend that we're going to continue to see.
Yep. Plenty's already started going to market, which was RateSetter in Australia. Changed its name after the exit of RateSetter in the UK, which was probably not quite what they were hoping for. We're seeing other lenders in Australia going to market as well.
And Doe's about to list as well.
Yeah, right.
So am I hearing that the new payments platform and the payment sector has been a real hotbed of innovation here in Australia? Because that was certainly what I think I was seeing over the last 5 years. Is that set to continue, do you think? Rebecca?
I think in light of COVID, payments we're going to continue to see innovative companies in payments. I think that multiple companies, particularly during the last few months, have pivoted to make contactless has gone up. We've seen more e-commerce platforms online, like Square, move to a digital offering. So I think we're going to continue to see payments innovation, particularly in the new COVID world. And Simon obviously can talk to this more, but I do think payments is an ever-changing landscape at the moment.
Simon, I think she's just thrown you that ball.
Yeah, I mean, there's a bunch of innovation, and to be honest, we've got a bunch of horses in that race in the payment space. So the bar is very high in Australia. You know, the uptake for PayWave was, I think, probably amongst the fastest in the world for Australian consumers and businesses. And so that sort of contactless we've been doing for a long time. And so, you know, really trying to make payments a seamless and integrated experience is something that is that I think Australia's really leading at. We've got an investment in a company, Slip, which is doing digital receipts, which will enable, you know, merchants to communicate directly with their consumers post-purchase through the banking app. That's now got all 4 banks on board. You know, there's a bunch of fantastic innovations going on in the payment space, and I think Australia will absolutely be sort of leading the way. I mean, I think the other thing that, you know, I think that data is something that we're also really pushing the boundaries on. I think we had the advantage of an awesome author of or architect, I should say, of our national data strategy, in Scott Farrell. We're now seeing the next iteration of that coming forward shortly. And I think that, you know, we've had the benefit of being able to see what didn't work in Europe to some extent with GDPR. I think it's had challenges for some of the local businesses who've struggled to meet the requirements of GDPR, whereas some of the US players were able to sort of tool up for it much faster. And I think that was probably a bit of a challenge. And so I think in Australia, we've really tried to strike the balance between innovation and privacy as effectively as possible, and try and break the trade-off to some extent. And I think Scott's done an awesome job in articulating that and bringing that into policy. And with the new, with a bunch of things, I think we're likely to see that continue to move ahead.
Okay. What's the opportunity for New Zealand fintechs coming to Australia, and are there specific considerations to consider when crossing the Tasman? Rebecca?
Well, I think first of all, relationships are key. So coming into the market, I think it's really important not only for a UK company, but for a New Zealand company to build the necessary relationships, whether that's with a sponsoring bank, for example, BZE into NAB, or whether that is with a co-working space like Stone & Chalk that can connect them to the banks, or whether that is with a VC supporting them. I think that, you know, having those relationships onshore before they come or any company comes to Australia, I think is very important. But I don't think there's the necessary things of making sure you've got all the regulatory licenses and speaking to ASIC to make sure that you've got the right licensing regime, or you've gone down the path of getting the right accreditation. So obviously, I think that there's one, the licensing piece and the right regulatory framework, and two, making sure that you have the right stakeholders on the ground. But I'm sure Dan at KPMG will have more to add to that.
Yeah, like, so I think definitely from a movement point of view and from a license and regulatory point of view, you need to be sure. I think New Zealand is often seen as being an extension of Australia or vice versa. So, and there are definite kind of very strong trade routes between the two countries, right? So the opportunities are large. I guess the Australian market is definitely seen as much more of a big brother, and kind of multiply bigger, right? So I think those who are looking to move, so for example, Harmoney is one of the digital lenders over in New Zealand who have looked to move into the local market, and they've managed to do so. But there are some challenges to that, not least some of the comments that Rebecca made. For example, setting up warehouse functions, setting up funding relationships, understanding consumer habits. There is a definite commonality between Australian and New Zealand consumer habits, which does help in terms of transitioning product from one market to the next. But yeah, I think kind of if anyone's going to have as good a chance, I think the New Zealand market should understand it, and the time zones make it easy and all that type of stuff. But yeah, you still need to kind of get your ducks in a row and make sure that you're making sure that you're coming out with a product which suits the consumers and which is right for this market still.
There are some misconceptions about the Australian fintech market. What are some of those things that we might dispel for those that are looking to come on down, that you think might be misconceptions about the Australian market, Simon?
Well, to be honest, there are specific misconceptions you're talking about that.
Look, I think maybe it's a size and scale thing, but also about the infrastructure that's down here to support them. You know, how does our infrastructure, for instance, compare to what is the case in the UK or Europe or even the US?
Yeah, I mean, look, I think Australia probably has been underrated somewhat in terms of that. I mean, obviously, the infrastructure from a banking and regulatory point of view is very strong down here. Payments infrastructure is very strong, etc. But I think the other thing that's probably underestimated is our ability to launch businesses that can, to help businesses actually get into other markets and to grow from here. So I think increasingly there are good relationships between Australia and strong relationships between Australia and parts of Asia, which I think, Australia can serve as a useful launch pad into other parts of Asia. And I think people should increasingly think about that. I think we have now a very strong talent pool to draw from in that regard across a range of kind of product functions. And with more and more banking talent, I think there's probably, London's always been a banking centre, but with the Australian superannuation seeing the growth that it has to become the largest pool in relative terms, probably anywhere in the world, the number of Australian, professionals who are engaged in finance in some way, shape or form, and who have deep experience in that regard is huge. So there's incredible finance talent in this market for those who come here to draw from if they want to scale up a variety of functions within Australia, be it sales functions, but also product functions and more regulatory and compliance-based functions.
Rebecca, have you noticed that the talent pool has evolved? Because I remember hearing, 4 or 5 years ago that talent shortages, particularly in technology, was a real issue. But as Simon has highlighted, to me, it seems that this is a very fast-moving area, and there's a lot of opportunity there.
I think that there's two different things. I think there's still a shortage in talent in relation to coding and UX and back systems engineering. But I think what Simon was talking about is that kind of sophisticated banking talent that we have from our strong financial services sector, and also from our expats that have come back from overseas. We've had a lot of people in the last 6 years come back from Singapore, the US or the UK, which have strong financial services backgrounds, but have also worked in fintechs in these countries. So I do think we have a huge amount of talent, whether that is across sales, marketing, regulatory. We have a huge amount of talent. I think the one thing in relation to talent is maybe that coding UX kind of architecture piece. However, COVID times, and I think that you'll see more and more fintechs maybe go offshore for some of those services.
Daniel, what do you see as some of the skills opportunities here, but also where do you see the shortages where those that are coming into the country might need to be wary of?
Yeah, look, I think definitely on that technology side, but I think that's quite frankly an evolution that many kind of Western economies face, which is kind of the digital transformation and the skill set to catch that up probably can't meet the demand necessarily. That is improving at a rate of knots, whether it be onshore, even having offshore hubs. I know some of the digital lenders have offshore kind of tech hubs, whether it be in Manila or out of India, to help them manage that to a degree. I think one of the things that has definitely predicated and driven talent is there's obviously been a royal commission into the banks locally. From an outside look in, you might think that the banks here have been particularly badly behaved or been kind of disingenuous in terms of their product. I don't think that's any different to any of the other banks around the world. It just so happens that Australia held a very public inquiry into that. And in fact, there's royal commissions in different markets, whether it be the UK, Canada, and the likes, which kind of follow suit. What you've found as a result of that, though, is that there's a lot of talent who've been in the traditional banking markets who are a bit disenfranchised with those models, and as a result of those, they're looking to make change. That, when you marry it with the potential financial incentives of and the success stories that we've seen as some of the more mature fintechs, has meant that there's been a bit of a flight in terms of new opportunities and tech opportunities to try and innovate and drive new product. And as a result of that, a number of the fintechs that we work with or that we're aware of are either ex-leaders within banks who have managed to hire extremely credible leaders, both from a regulatory point of view, but also from a market and customer point of view to lead their propositions. And I think that's something that we will continue to see. The other thing is we've got a bank, four banks who I mentioned earlier have control of 80% of the banking market. They're not lazy though. They've got fantastic digital offerings in their own right. But as a result of that, there is skill set in terms of those digital transformation journeys and what is and isn't possible in a very mature big bank versus what might be possible, for example, in a small fintech or a nimble innovator. So I think the talent here is actually pretty exceptional in terms of where they sit. Of course, we can always do better when it comes to technology, but that innovation and ideation is particularly strong in the marketplace here, I think.
Right.
I think Dan's right. I think that the technical talent is that, that was, I think, a bit of a vulnerability for Australia historically. I think it is improving at a rate of knots. I think one of the key roles that you'll find is a real barometer for how sophisticated is the talent in this market is product talent. And I would say that the product talent, we're increasingly seeing people who've been with large US ventures or they've been with some of the larger non-fintech Australian ventures, and they're bringing some of those product skill sets into Australian fintech. And I think that's actually been a pretty powerful, that is probably, I think, one of the most rapidly evolving areas of improving talent.
Excellent. Look, I've had a question from the audience. On the Friday, the 4th of September, the government announced the Global Business and Talent Attraction Task Force. So, Rebecca, can FinTech look forward to expanding into Australia using this initiative to support, or is it too early to make that call as yet?
With all honesty, Andrew, I don't know about this initiative. I've been too busy in CDR, the Senate inquiry, to know about this one. So my apologies that I don't know. I will throw that to either Dan or Simon if they're across that particular announcement by the government.
It was only last Friday, so it's a very recent announcement. Any updates on that one either? No? Okay.
I don't have any particular. The one thing I will say is that sorry, I have a barking dog in the background. Apologies.
That's right.
From home.
So have
I. There is a global talent program that is actually pretty helpful in trying to bring people out without necessarily the level of sponsorship that they've required traditionally. And we started trying to use that with a couple of people that we're bringing out. So yeah, I would say that that is improving. But yeah, I haven't seen that more recent announcement, and definitely interested to look into it more closely.
I just got a quick text message away in the gap there, and from my source, it's a relaunch of the previous entrepreneurial visa, which I know has been, which is what Simon was just talking about. And I know that I have been recently involved in getting a few people into Australia on that visa. So I think there is massive opportunity if we are talking about the same visa, but just renamed to drive tech and fintech talent into the country.
Excellent. There is still some work to do by government, Rebecca, to improve the fintech startup environment, and the Senator alluded to some of those earlier on today, and also there's a budget update in October, which is unusual because normally that's in May, so normally we'd know about where the support, financial and so on, is from governments. What would you like to see the government to do to support stronger growth in this sector going forward?
I think the number one issue for Australian fintechs consistently is the R&D tax incentive, which has been something that the government hasn't previously moved on. I think that the key issue is, one, in relation to clarity on the software guidelines and making sure that fintechs can claim. Also, the rebatable amount. So this is something that FinTech Australia has been advocating for a long period of time, that we think that the rebate should increase, and so should the funding pool for R&D, because it can be a gateway for innovative companies, and it is importantly runway capital for them. And I think Jane will announce in the budget that we will get a data body, which I think is incredibly important as CDR continues to roll out. I think having one body that manages all the data across the economy will really help the digital-led COVID recovery.
Daniel, same question to you. What else would you like to see by way of government initiatives and supports to give the industry a bit more support?
Yeah, sure. I think clarity on regulation and on licensing is an area which I think a lot of fintechs are looking towards. There's been a lot of kind of uncertainty, in particular in the buy now, pay later space, around kind of licensing requirements and credit. In addition, at the moment, there's a moratorium on the issue of new banking licenses to non-existing offshore and very well capitalized banks and financial institutions. So again, kind of making sure that we have clarity over the timing of that, when that opens, so that either incumbents in other markets can join, or new businesses who want to set up here can have very clear clarity of what the capital requirements are in that regard, and the timing associated with that. I think continued investment around talent and the ability to transfer talent into new markets. So many years ago, when I first moved here, there were kind of 457 visa allowances, which allowed you to kind of give allowances and tax rebates. Those have kind of moved away, which I understand. But again, if we really want to harbour the best talent, we need to make sure that it's financially incentivized for the companies and for the individuals to do, for them to do so. And yeah, just generally, in particular, kind of keep doing what they're doing around kind of taking some of those barriers to entry that the incumbent banks have in place down. And that's what kind of CDR and open banking is planned to do. That's what some of these changes to regulatory license regimes have tried to do. And I think we welcome kind of continued endeavours in that regard to ensure that it can be a level playing field, and that it's not just the kind of the big that will succeed, or those who have got infinite amounts of capital.
Simon, same question to you. You've had 6, 7, 8 years of doing this now, pretty extensive experience and a lot of success as well. What are some of the more obvious things that you still think need to be worked on, and what's holding it back?
Look, I'd agree that I think you can always do more with talent. I think, you know, it can sort of touch on very political areas, which is disappointing. But the reality is, the more talent that we can get here in the technology space, the better for Australia and for all companies coming through Australia. I think I think it's fair to say that some of the attempts to try and create easier channels through ASIC and through other parts of the regulatory environment could probably still be improved a little. And I think there are some overseas versions that have probably worked better. A big one for us is FinTech is still not generally an eligible investment for Australian venture capital funds that are established under the Venture Capital Act, which is still disappointing, given that it's obviously I think now the largest single sector of investment for venture capital. Most of the venture capital funds have had to set up funds outside of that Venture Capital Act in order to be able to invest in FinTech. I think it's disappointing. There's a fear that's, I think, left over from a long history of some Australian entrepreneurialism that looked more like financial engineering than genuine innovation. And there's this fear that somehow that will be encouraged. But, you know, there's a lot of genuine innovation that I think is being not getting the support that it should be getting because of that sort of fear of financial engineering. But look, generally, I'd say I think it's got the right level of attention from Australian government. We're fortunate that the current Prime Minister was probably the major FinTech champion for Australia since 2016. And I think his appointment of Jane Hume has obviously been fantastic, and she's continued to provide focus in that area. So I still remain optimistic that even where things aren't where we want them to be, we're going to continue to see work happening. And, you know, the work Rebecca's been doing to really champion that on behalf of the industry, I think has been fantastic as well.
Okay. Can overseas fintechs expect to access capital from angels or VCs here in Australia, like they would, say, in some other parts of the world? How do you see the funding side of the market?
I think probably that will increasingly be true because I think the Australian venture funds are getting large enough. I mean, the reality is, by the time you're coming to Australia as a fintech from the UK, ideally you've got a reasonable level of funding already. So you're probably looking for more like a Series B, C type funder, and possibly even later stage, Series D. But we now have VC funds that can participate in Series C, D, etc. You know, SquarePeg's now $1 billion fund. As they continue to grow, I think we'll probably see more of that. And we are seeing some of those funds actually starting to invest offshore. So SquarePeg probably most active, investing out of Israel, but also investing in Southeast Asia. So if companies are coming here with more of an Asian ambition, I think there's the potential to be able to raise capital from Australian VCs, but that's still probably an emergent phenomenon.
Daniel, would you see it the same way, the funding question?
Yeah, I would. So I think you'd have gone even as recently as 3 or 4 years ago, all of the VCs locally were very kind of locally focused in terms of their ambitions. And that was partly to do with the size of the prize locally, but also the size of their funds and their ability to move into new marketplaces and look offshore. That has and continues to open up as the funds get bigger and they have success and exit some of their existing portfolio. What we are seeing is kind of alongside some of the VC funds, some of the family offices, and even some institutional investors increasingly being more active, though, looking at offshore investments, especially where there is a tie to Australia, but it goes beyond that. And that's as a result of there being some success in some of the investments that they've made historically and where they've gone globally. In addition, we're seeing that the ASX has been a strong proponent and supporter of the technology, and FinTech is a big component of that. So they've set up their own subsector within their tech, tech indice within that. And as a result of that, what we're seeing is often offshore fintechs actually coming to Australia to potentially look to list or co-list on the ASX as well. So all of that is kind of moving things in the right direction. And I think it will only ever get stronger, and the availability of capital will only ever get more appealing. How parties come about structuring that? So is that an investment into the topco? Is it an investment just into the Australian subsidiary? How that looks? I think that's where people need to be thoughtful about it, to think about, okay, how do we make sure that they can have a voice in the fund rather than just being a silent other investor? And sometimes that's not a problem, but those are some of the things that I think companies should be thinking about as they're looking for capital in local marketplaces. Final thing to note is capital comes in the form of equity, but also in the form of debt. So we have seen in the last 6 months or so the prevalence of credit funds being set up locally by VCs. That's something which is pretty commonplace in the US and in Israel and the UK. That's kind of now only being set up here in Australia. But again, that will help develop funding markets and warehouses and also kind of products outside of equity. And for some time now, we've seen kind of the emergence of senior lenders and offshore senior lenders as within that, investing within warehouses as well, which gets digital lenders and fintechs with a balance sheet, the ability to lend. So that's something which we have seen and continue to see being quite successfully supported locally as well.
Yeah, I mean, I'd add to that. So Partners for Growth, they've actually been going for a while in Australia, but they're increasingly investing in credit books. Actually, some of the credit books they've been investing in are in Asia, but I think they're someone to look to. And we've had fairly active investors in credit books from the likes of Challenger, the largest annuity fund in Australia. So they have an arm, 255 Finance, that does quite a bit in that regard. NAB has been pretty active, to be frank, in supporting larger warehouses. And I think Westpac is probably still the largest provider of wholesale finance, but probably goes for the larger scale fintechs rather than the earlier ones that I think NAB's been shooting for. I did see one question here, which is, the best banks to work with. I would suggest anyone coming here should really try and chat to all of the banks. They all, I'd say Australian banks are now all competing pretty heavily to engage with fintechs as reasonably aggressively. They actually have co-invested on a bunch of investments, which is, I think, a great thing. There are some things where, it makes a lot of sense for them to be working across multiple banks. But by all means, speak to all of the banks. I think they all have their sort of strengths and weaknesses, but they're probably best to tell you about what some of those are. But, they're all very keen and able to engage with ventures at a variety of stages.
And Rebecca, sorry, over to you, Daniel.
I was just going to say, exactly like just reiterating Simon's point, it is worth speaking to them all. They've all got slightly different approaches to how they look to engage. What we have seen over the past few years, but it's obviously speeded up in a COVID environment, is this need for digital transformation has kind of changed things a little bit. Historically, there was a bit of, we can do that, or we could do that ourselves, or build it ourselves. I think the reality is that the need to transform is becoming quicker, and the need to innovate is not something which can be done in years anymore. It needs to take place over months, if not sooner. So there is this increasing propensity for the local banks to partner with, or to use, or to invest in fintech partners, and we're seeing that play out kind of in real time. So yeah, definitely worth speaking to all the banks to understand kind of where their strengths are, but also where their weaknesses are, and how fintechs might be able to assist with that.
And just jumping there quickly, and more broadly, our mutual banks and our smaller banks are also willing to engage with fintechs.
True.
So not just the big four, but our mutuals are rolling out. Bendigo has partnered with TikTok and Up to roll out numerous different offerings. So not just speaking to the big four, but definitely speaking to Macquarie, Bendigo, and BOQ, and a lot of the other mutuals, because they're very interested in engaging with fintechs as well.
Yeah, that's a beautiful segue to where I wanted to take it, Rebecca. The international guests coming down to Australia, and don't forget, there are 18 Australian fintechs that Newfound are taking on this program out to the UK as well. So what I wanted to get to is, what should those fintechs that are coming here look to ask in this next 2 weeks and when they're doing their research about what the Australian sector is looking for, and most importantly, where is the competition, and maybe where is there less opportunity or less competition, so that you know, that they've got a little bit more room to move. I know, as we've mentioned, payments has been a huge area of activity and competition. But Rebecca, where do you think there is a lot of competition from fintechs already, and maybe where are some of the areas where there's still a little bit more space to move if you're a startup?
Well, I think the better question is, what is the fintech's purpose and why are they looking to launch in the market? And if they have a genuine problem to solve in the Australian market, I think they will have a lot of opportunity. I think spaces that still have a right to be picked at are like insurtech. I think there's a lot of opportunities for insurtechs in the market, particularly given how slow moving the insurance sector is, and it's very old school. I think super, we've got a massive piles of super. So I think any startups in the super space have a great opportunity. And more broadly, I think we're going into a little bit of a reg tech era. I think post-Royal Commission, I think there's lots of opportunities for reg techs to help with compliance and drive efficiencies. But I think any fintech that is looking to enter the market should really do their research on not only who's here, but who can help them, whether that is a co-working space, whether that is some of the VCs, whether that is FinTech Australia, because we have a large network, whether that is the professional services such as KPMG or EY that have huge FinTech offerings, but really making sure that there is a problem to be solved. I think that will be key in launching in the market.
Daniel, I'm going to ask you the same question. When you're talking to your clients, prospective clients, and looking to support them, what are the key questions you ask them to ask them themselves?
Yeah, so I think the first is their proposition genuinely differentiated versus what is available in the market? I'm actually a firm believer you don't have to necessarily reinvent the wheel, you just need to do it better than others, right? And the consumer will naturally move. And therefore, kind of I've seen in the local market and other markets, very successful kind of competitors come into the market and actually be able to take market share because their proposition is strong in that regard. So all of Rebecca's points around doing your research, doing your due diligence, understanding what the competitors are, understanding the marketplace, what it looks like, really understanding consumer habits, because the consumer habits here are slightly different to different marketplaces, and therefore getting a real view on, okay, well, what is the capacity that we need to get to, or the volume that we need to get break even, to be able to grow, to be able to succeed in the market. I think there are pockets of areas which are underrepresented. Rebecca's mentioned a number of those. I think cyber, which isn't necessarily just fintech, it's more broad than that. But in Australia, there's no real kind of single cyber solution available, and that's increasingly becoming a challenge. We've mentioned insurtech, we've mentioned reg tech, prop tech is increasingly becoming more prevalent, and that's not just a local basis, that's a global basis. Australia again has a very high propensity for people to have mortgage and home ownership, which is different, for example, to the US market. So there are differences here around how people do things. I'm a strong believer that there'll be fantastic solutions in other markets which just haven't made their way here. There'll be some copycats which get set up here, even after Pay to a Degree was a copycat of Klarna, which had been around for a long time, right? So really it's about kind of finding your niche and looking at your product and being quite critical to say, well, do I think that it's going to be taken up in light of what the alternatives look like in the marketplace?
And I think a really great example on how our market is different to the UK, and we should have touched on this a little bit before, but our big four are incredibly digitized. So their banking apps are incredible. CBAs, NABs can do all the things that you want them to do. So you have to remember that our banking market is very sophisticated and the digital product offerings are very high. So there is lots of different considerations when coming into the market.
Yeah. Simon, you mentioned earlier in one of our conversations that cost of acquisition of customer is one of the key things that you look for. What are some of the other things that you look for when you're looking at a fintech, and particularly for someone that's coming in from overseas, where maybe they're used to a much bigger market, it's got a much larger population, and here in Australia there's 25 million people. What are some of the key things that you're looking for when you're summing up a startup and giving advice?
Yeah. Well, so I mean, talent is the one that, you know, the entrepreneurs is I guess the one that is always key when you're looking from a venture point of view. And as I said, we're increasingly seeing people who have both banking experience and startup experience, and that's really right in the sweet spot when you have people who can combine those, because people hopping straight out of banking can sometimes take a little bit of a sort of large bank approach to how they think they need to build their startup. And, you know, when someone comes to me and tells me that they're looking for their seed funding and they're going to be on a 350K salary or something like that, you know, that can be one of the first red flags where you go, I don't think you've clocked what you're moving into at this stage. So, you know, I think talent is critical. As you've mentioned, for us, distribution in fintech is, I think, definitely one of those things that we hunt for, because, you know, a lot of fintech doesn't have the sorts of network effects that existed in some of the media and ad tech spaces. And so you have to really try and hunt for where you can find those clever distribution strategies, where you can find virality, where you can find network effects, etc., or some other way to get low cost of distribution. Because, you know, the Google tax is extremely high and tends to ensure that any super normal returns you might have available get competed away fairly quickly. So if you're just relying on sort of standard customer acquisition models, I think you can really run into problems. And you know, I think we've seen that most probably in those who've been going after the superannuation space in Australia, where I think a number of them have really struggled to get to any material scale because their cost of acquisition just hasn't come down. In fact, it's probably gone up over time. The more of them are around and the more of them are hunting for customers. So yeah, so they're key. But, you know, we're always looking for people who, I guess, have seen an insight that perhaps others don't have. And I mean, just harking back to the previous question you're asking about spaces that are potentially still open for competition. You know, I think some of the business to business space is really what we're starting to see unfold at the moment. A lot of those problems are quite nuanced, and only those who are operating within a particular industry will understand what some of those problems are. So, you know, if you've brought a unique insight from your industry, be that from banking, that you've got a particular window, or from some industry where banking's been, you know, part of the problem, or your financial services you've been receiving have been part of the problem, and you're trying to solve, then I think that's always interesting. You know, we get most excited about pitches from entrepreneurs who completely change the way we look at a market and share with us an insight that we never would have imagined before.
Is superannuation getting a lot more attention? And I asked that question because it's been mentioned a couple of times tonight already. It is mandated to growth. There's $3 trillion of money being managed through superannuation in this country. But I'm not sure that I've seen a lot of fintech operations that have changed the way that sector has run. Now, maybe it's because I don't have a clear enough view, but Simon, and then I'll ask the other panel members as well, are you starting to see a little bit more attention in that space, or do you still think there's a lot of opportunity there?
Look, I mean, there was a lot of attention to that space, I would actually say, a couple of years ago. And I think there were a lot of people who had very big hopes for what they might be able to do in that space. I think that space is exactly where that customer acquisition problem is probably the largest issue. And as a result, some of those early hopefuls, you know, have either pivoted so that they're delivering more of a back-end solution into the superannuation market. And I think that there's quite a big opportunity there because, there's a ton of cost in the back end of superannuation, but it is complex. It's probably not something that people coming from overseas are going to necessarily have a great opportunity to go after, because it's such a, you know, dark, the back end of these things is such a dark arts, and the Australian superannuation industry is so, you know, particularly nuanced. So I do think there's opportunity there, but you know, I actually think it's for a number of the players who've already launched offerings there, who are trying to pivot their way into a viable model, who are really exploring that the most at this stage. I haven't seen much coming through new in that space where I've thought, yeah, that's a new interesting take on it. We obviously have a venture in that space, Flare, which is, you know, coming at it from a different angle. And for them, they're solving distribution as part of an HR onboarding platform, which has been pretty powerful in terms of keeping the cost of acquisition down. But, you know, generally, I think it's a pretty hard one to solve.
Excellent. Rebecca, I'm actually a fan of RegTech, and I know that sounds strange. My wife tells me that. But the reason why I mentioned RegTech is because I know that RegTech Australia fits into your remit as well. I've seen some great work already. I always think of RegTech as, you've got to ask the question, it's not about how can we get through regulation compliance, but how can we make the race car go faster, and that is have better brakes to get around the corner at higher speed so we can get on with doing business. What do you think the opportunities, what are you seeing in RegTech here in Australia? I know it's got a lot of attention and it's a strength, but what do you think, how would you describe the opportunity in RegTech here in Australia?
Well, I think the opportunity is only going to grow when some of the Royal Commission recommendations come into enactment. And obviously they were meant to go through earlier this year, but due to COVID, we probably won't see them to either back end of this year or early next year. But I think it's driving that efficiency wheel. So we'll see RegTechs help with lending decisions or helping with lending compliance. We'll see RegTechs help with digital ID and digital ID framework. So I do think it will be a driver in relation to efficiency. And I do think there's a massive opportunity for RegTechs in financial services in Australia. There's lots of, it's a well-known problem that we know lots of banks and financial services are still using spreadsheets to keep a lot of their data. So I do think that, you know, RegTechs do have a huge opportunity. It's in relation to obviously the liability piece and the slow procurement, which I think that the Senate inquiry has actually made some recommendations on, but I think the procurement process and where the liability sits in that framework are keys to driving that uptake.
Excellent. So now we're going to wrap up with last questions for all of you, because we want to wrap up in the next couple of minutes. Daniel, what are some of the final things that you'd like to say to fintechs that are looking to come here to Australia and get involved? Give me one tip or two from you.
Yeah, sure. Look, I think the first thing to note is that the market here has evolved materially over the last kind of even 5 years in terms of where it's got to. So kind of when KPMG started to make a big investment into this space probably 8 years ago, I got much more involved in it, probably 5 or 6 from then. And even since then, we've seen not only kind of the maturity and growth of a lot of the incumbents, but the breadth of the landscape has shot up. So we've got now over 550 different fintechs in the marketplace here, all of whom are coming at it at a slightly different angle, a slightly different direction, but all of whom are providing innovative new solutions. And you match that with what is a traditional banking market, which has just been through a Royal Commission, which is kind of really struggling around kind of what is a clunky, archaic branch network and archaic systems. I do think there is a unique opportunity in the marketplace here for people to come and supplement, to grow, to innovate with new product. And I think that's something which consumers will demand and continue to demand so long as the product puts them at the center. So, and then you match that the beaches and the sunshine and everything else, and Australia seems like a pretty good place to kind of get to start from a talent as well as a retention perspective.
Simon, same question to you. How do you see the next period ahead for the Australian fintech startup community? What's there to look forward to?
Look, I mean, I think it's only going to continue to grow. I think there's more and more opportunity. You know, I think one of the things I've definitely seen coming into Australia, you know, a lot of those companies that are selling to banks, I've probably seen more of them be successful in coming into Australia than than potentially some of those who are going more for that kind of B2C or type offering. And I think that that opportunity is going to continue to grow for the reasons Rebecca's talked about. You know, the pressure on banks to innovate and the lack of capital available to do that with means that the banks are really having to say, how can I partner to deliver innovation fast? And particularly, how can I partner to deliver cost efficiencies to ensure that I'm dealing appropriately with all of my customers, not relying on kind of processes that can generate human error, etc. So, you know, I think there's a ton of opportunity supporting the banks to come through this transformation that they've been pushed towards.
Excellent. Rebecca, final word to you. Why is 2021 looking so exciting for the fintech community here in Australia?
I think 2021, there'll be a real opportunity in the payments and the data space. CDR will be further rolled out. There will be intermediaries allowed into the regime. And also there'll be the mandated payment system under the MPP. So not only do we have 2 key infrastructure changes, but we've just launched the new regulatory sandbox for people to test their products, which I should have mentioned before, is definitely another opportunity for companies from offshore looking to expand into the Australian market to test their products. So we have the new regulatory sandbox, lots of different regulatory changes. So hopefully the combination of the 3 of those things will drive the ecosystem. Hopefully there'll be a flow of capital back into the sector post-COVID, and the government continues to support the sector.
Excellent. Well, look, with that final comment, Rebecca, Simon and Daniel, thank you very much for joining us today for this extended panel discussion. I think that you've given us a lot to think about and a lot to consider when looking at bringing the business and your effort down here to Australia. I'd like to thank you for your time and energy, and we look forward to the next 2 weeks of this exciting discussion. Thank you very much for your time.
Thank you.
Thank you.
Thanks, Andy.
Indeed. Now that wraps up today's panel discussion. We've got a start at 5 p.m. tomorrow, right on time. It's important that you are there on time to catch the best of the sessions, opening sessions, and also the panel discussions we've got planned tomorrow. We're going to be meeting some of the hubs and also government agencies that are going to be supporting you in your endeavours down here. I will encourage you also to ask questions through the Q&A tomorrow, and then also stay around for the Meet the Speaker sessions, and that'll allow you to personally engage with the speakers by way of video to be able to ask them questions and have an ongoing dialogue with them. I think it's a really valuable contribution and the way that this virtual market mission is working. So I'd like to take this opportunity to thank you all for joining us today. Once again, thank Newfound for opening this very exciting virtual market mission. And I look forward to seeing you at 5 p.m. Australian Eastern Standard Time for what should be a really good discussion over the next 2 hours from 5 to 7. Thank you very much. I look forward to seeing you tomorrow. Thank you.